Winston just said to me, Felix, those Apple earnings look a bit dodgy, don't they? And I said, why? Winston, the stock is up, the market's happy, everyone's feeling wonderful about it. What's your concern? And then you walked me through it. And then I thought, I think we ought to share this with you. So I'm going to do 5 things here for you. I'm going to give you a very quick earnings summary. I'm going to tell you whether it's better or worse than expected. I'm going to tell you where the growth's at. I'm going to tell you who knew in advance, because somebody on Wall Street seems to have known in advance, and how to trade it, how to make money out of this. That's what the whole point is, isn't it? Of course, it's not financial advice, but if you want to learn how I trade and how Winston and I make money in like 3 hours a week, and how we made these returns in 2022, 126%, 2023, 105%, that's return on capital employed. And I'm not promising you the outcomes, but I'm promising you that I'll teach you the exact system that I use. Then come and join me on Tuesday evening, felixfriends.org/webinar, and I'll teach you everything. Okay, here is the earnings summary. So let's be quick about it. This is number 1. And iPhone sales, or revenue rather, down -10%. Miss, right? Terrible. MacBook sales are up 4%. That's quite good. I helped with that. I just bought one of my team a MacBook for being a superstar. And iPad sales are down 17%. That's pretty bad. Apple Watch sales rather, down 10%. AirPod sales, I guess, are part of that same number there. Services keep growing, 14%, and that's good because services have higher margins typically. Revenue overall down 4%. That doesn't look very good, right? But they did manage to squeeze out an extra 2% out of margins, 1% out of operating margin, and 1% out of net margin. So it's not entirely a terrible story here. They did also spend a bit more on R&D and G&A, which I didn't particularly love, but they have split out here, I think for the first time ever, that services have a 75% gross margin, and they just want to say that, look, this is good. There is something good here. The fact that they're doing that, in my opinion, for the first time, makes you think, oh, what are they covering up? Well, what do they actually do? We're going to get into the massive buybacks in a second, but let's get into point 2 here first, which is it better or worse? And this is compared to Wall Street expectations, the lovely, kind, generous people on Wall Street who love you dearly. And revenue was actually a beat. Products overall were a miss because of iPhones were actually a beat. A MacBook Pro was a beat, but iPads and wearables was a miss. Services was a beat. China revenue came in worse than previous, but better than the horrible expectations. So gross profits were okay. Margins did not meet. Earnings per share beat. Free cash flow beat. 20 billion free cash flow. That's a lot of numbers, right? You're thinking, my head's swimming with numbers. Why are you doing this to me? Because it's important. And I enjoy torturing you. So where is the growth? Well, it's not in the US. It's not in China. It's 0.7%. I mean, that's basically nothing. It's not in Japan. It's not in the rest of Asia. Eskimos, maybe. No, overall, revenue is just declining year over year, and that isn't particularly good, right? So what is actually growing at Apple? Well, most of it isn't. Other income is growing, which is sort of, pencils or something. The stock price has gone up. Interest expenses have gone up. That's a bad thing, by the way. It means they're spending more money on borrowings. Interest income has gone up almost the same amount in terms of percentage terms because they've got lots of cash. And stock-based compensation has gone up. That's not very good either. Share repurchases, we do like that. Service revenue is up, and that's pretty much it. So very, very, very little good news from this. It's not terrible. It's still a brilliant business with brilliant brand and all of that. But it will give us something new, for crying out loud, right? So what's the next thing then to look at? Well, what have they done? Well, how do we get to this massive jump in the stock price here? Where we closed the day at 172, and after hours we jumped 10 points, so more than 10%, because they announced 110 billion buybacks. So they're basically buying their own shares more than they've ever done, more than any company in the world has ever done. Is that a good thing? Well, yeah, we love it. It means overall the stock market this year will have more than $1 trillion in buybacks, which just keeps the party going. It's like stimulus, basically. Less shares, same number of shareholders, means everybody gets a little bit of a bigger piece of the pie. But is that sustainable? Well, I have put together a full set of research. If you want to get all the numbers and everything for you, just go to felixfriends.org/Apple and you can download that. And that'll allow you to like digest all the data yourself. But dividends gone up a little bit, buybacks higher. So this is now a value stock. This is now no longer a growth stock. There is very little innovation here at present. There might be something with the new MacBook Pros and the new AI chips and so on. I'm not saying that there won't be, but just right now it doesn't look particularly wonderful. So why do I say somebody new in advance? Well, go into optionswatch.io, click on the Smart tab. It's a 30-day free trial to this. We're building this platform to give you Wall Street level of data, institutional quality data. You see this trade here? Someone put it on 11 hours ago, just before earnings, buying a $175 call option. They spent $2.3 million on that. That probably wasn't some bloke in the basement. That was an institution, right? And we know that because these trades were done through dark pools or through a bunch of shenanigans that institutions use to hide their trades. And it makes you think, that's a pretty big call to make. How did somebody know that? Well, I'm sure the SEC is on it. Probably not, but there we are. So there is always somebody who knows something that you don't know. And one way to keep an eye on that, it doesn't tell you why they bought it, but it's useful to understand it. So when I set up trades, I check this data for my stocks, and then it makes me either more confident or less confident, and that'll depend on what I do with the trade or the trade size and positioning and everything else. So what could we do? We could go against the grain and we could trade this. And how do you do that? Well, we could say, look, most stocks mean revert, which means they overshoot and they come back down. So we're here right now. And, I think maybe it'll go up a little bit more and then it'll probably come back down again. So what could I do with it? I could set up a trade right here, right now. If you get that reference, let me know down below in the comments. and basically, I would make money if the stock went up again, another 4%, or if it went down any amount from where it is right now. And that trade at the moment has a 63% chance of profit, which isn't particularly wonderful. It gives you a 14% off profit. It also isn't particularly wonderful, so it probably isn't the greatest trade in the world. Though I think it's probably more likely that we are not going to exceed $190 because these green bars here are resistance and they are going to kick in. So what will be the alternative way of going with the flow? And a lot of the time it's better to go with the flow than against the flow, because the flow can be pretty strong. It's like a river. You're trying to swim against it. Crikey, it's exhausting. The other way around, you just flip on your back, you close your eyes and you get there. It's lovely. Well, what's the smarter thing to do then? Possibly, and I'm not recommending these trades. I'm just saying this is something you could do if you really wanted to, and I want to walk you through the pros and cons here. So we could set up a trade down here. On the left side, of course, the stock chart. The right side shows you the profit potential of this particular trade, which is a bull put spread. If that means nothing to you, come and join me on Tuesday, and I'll explain to you how we make money with these very, very regularly. So we're here, right? We are here. My trade is down there, which means Apple could collapse minus 10.7%, or it could keep going up. Either way, we potentially, it says here 31%. That might be a little bit less by the time the market opens, but it either way at the moment has an 83% chance of making us money, which is a lot better than the 60 of the other direction. So this is more what I would probably look at, is be well below the market, try and be sort of in this 170, 165 support zone somewhere down here, because we got support, and then just enjoy the party a little bit. By the way, we also make money if it just goes sideways, which is also nice, right? So there's a bit of a bonus there. So that's the sort of thing that I would do. High probability trade. Don't buy the stock. Don't sell the stock. That'd be me. For the short term. For the long term, there's a different story. But I do think Apple needs to pull something out of the the hat. They need to give us some real innovation that's actually got mass market appeal. And I just haven't seen that. They just seem to be making like these gradual tiny little changes to a new camera and a slightly better chip, all of that. None of that really makes people go, oh my God, I must have it, right? Like I just got a new phone, for example. It's a Samsung phone, but it does pretty much the same thing as the previous Samsung phone I have. It's got different edges. It's got a slightly better camera and it's got a bit more storage, but it's sort of like, I wasn't excited to buy the phone. You know what I mean? I just bought it because I needed a second phone. And that was basically the motivation for that. So a lot of people will have the previous models of all these Apple products and they'll just be like, do I need the latest one? And of course, there are the hardcore fans or the tech lovers who always will, but a lot of that audience doesn't. So can they still grow? Yeah, they can grow service revenue, and they're still able to bring profit margins up. But ultimately, if you really want to excite the market and you want to get back to all-time highs and beyond, I think you need to do more than just sort of wishy-wash over the whole thing with a huge buyback. That buys them some time, but it doesn't really solve the problem. So this is probably the most bearish I've been on Apple in the medium term. Let me know what your thoughts are on that. Maybe you disagree with me violently. I'd love to know. Put it down below in the chat, in the comments. And I love you for tuning in. Winston just said to me, Felix, what stocks are you buying in May? And I said, actually, I've got 6 on my mind. Have you got any in your mind? And he just started talking about cucumbers and carrots and how he wanted to go to sleep.